Hello everyone, welcome to tonight's market update. My name is Kay Kim with the Traders Club, twotradersclub.com. Again, thank you for tuning in. I'm gonna do a just quick market update tonight. I know weekends ahead. I don't want to take much of your time. I just thought I'll give you just quick thought on the market, on the sentiment of the market, and I want to start with the NASDAQ first. I want you to know that as of today, on the major indices, the sentiment of the market is bullish in all terms, meaning primary term bullish, intermediate term bullish, minor term bullish. If I put a side note, I would say, well, we are dealing with extended market. We are dealing with, overbought status in the minor term. But let me tell you this, and let me tell you, the market crash will not happen. So just stop talking about it. You know what I'm saying? There are videos that I'm explaining to you why the market will not crash. I've been saying this since late 2015, early 2016, all throughout this year. Market crash will not happen, and just get that out of the way. So let's talk minor term. All right, let's talk. I want to start with the Qs. I want to start the NASDAQ first. Obviously, NASDAQ is now making new all-time high, along with the NASDAQ, Dow Jones, and S&P 500. Obviously, this is a NASDAQ Composite index itself, not the Qs. We made all-time here just about 4 days ago. New all-time high record. Historical record, okay? S&P 500 index been a new all-time high record for a while now. Dow Jones Industrial Average also is been on staying above new all-time high. We've also did all resistance, new support. We bounced off of that. Currently, we're staying above that 20 EMA. So let's go to the Qs. All right, so Qs, obviously, we had about 2 months of straight bullish run after the Brexit panic. At that Brexit panic, so many crash theorists, so many bears, so many selfish lunatics has been calling that was it. The whole thing is gonna crash, and they were it took just 1 week to completely demolish them, completely destroy their dreams and hopes, because we had that 3 white soldier here. It started off with the 1 white soldier. We gapped up. We had another gap. You could say that this was a breakaway gap, continuation gap. We talked about in the market update there. We had an inverted head and shoulder. Once we broke out, that was it, and it's been continuing to grind higher ever since. And you can see how 10 EMA continues to act as support here. This is 10-day moving average. It acted as support here. It got up. It acted as support right here. And then last 3 days, we've been just kind of hanging above this vicinity. So why are we slowing down here? So if I just do a little Fibonacci here, you can see I just measured this move. You could look at that as a wave 1, and then you can look at that as a wave 2. This is a 138.2% extension vicinity, just right on the dot. Do you see how just right on the dot that we slowed down? We do a little bit of shooting star candle here, just a little tiny one, not a huge impact, I don't think, but kind of giving us that micro term sentiment. And we pull back, and then the 10 EMA caught it. You see that 10-day moving edge on that blue. And so I think this is a level that we held, that 138 or that was the level acting as resistance, and we pretty much sandwiched between. So at this point, as of today, no one knows for sure if it's going to continue higher, it's going to pull back. At this point, if anybody says anything, they're just guessing. They're just guessing. But here's what I can say. We are dealing with 138.2%. So I think if we lose this level on the Qs, 116.38, okay, I think next level of support is this level of, this is a gap area, which is this 115.65, 115.57. So let's say we lose 116.23 on the Qs, it will probably come down to about 115.50. Fill this gap. That's the level where we have a 20 EMA. That's a 20-day moving average, exponential moving average. Residing in that vicinity probably would act as, on short-term support. Okay, so again, we are dealing with, let me go here, we are dealing with overbought status. What the hell? There you go. On the Qs, you can see the MACD is crossed to the downside, giving us that, you know, kind of a, there could be, maybe the buyers are tired in that vicinity. RSI is getting into the overbought status, trying to come down here, and then our stochastic is also pulling back. So that giving us that it's losing steam. Doesn't mean that it's gonna just flat out just come down, the whole market is gonna crash. Okay, if you think that, you just not understanding everything. Everything. So again, so when we look at the price section here, we have support 10 EMA, we got support 20 EMA with the gap area, and then the next support will be about 114. And I think we're probably going to hang around in this vicinity in coming weeks. So those are the levels to watch. Again, just because we had this kind of move doesn't mean it can go a little bit higher to about 120, 155. It can definitely keep grinding higher. So I wouldn't just start shorting here and start thinking that just because we've had this kind of move the last 2 months, well, it's time to short. I don't think that's a wise move, because even if this thing pulling back, there are a lot of support levels that is going to come and it's going to retest that level. I think best thing will be, you know, just watch and see how these levels work and then trade accordingly. Again, the sentiment of the market is bullish in all terms, but we are dealing with the extended levels in the minor term, and these oscillators are telling us maybe the buyers are getting tired. So we may see some sideways move, we may see some pullback, but the sentiment is bullish, and I think that the pressure of the overall market is the buyers are gonna still come in. Any kind of dip, any kind of decline, I think the dip buyers are gonna come in and buy it back up. So let's go to Spider here. Spider actually holding up, and I think last market update we talked about how watch these moving averages, because they're going to act in a perfect way where we lose 10 EMA, comes back down to 20 EMA, and then we get back up. We pull back, we hit that 10 EMA, we go back up, we come back, pull back, lose that 20 EMA like a few days ago, hit that 20 EMA, you see that pulls right, it goes right back up, and then now we're holding that 10 EMA. So looking at a minor term, we've been in a bullish sentiment. I mean, we've been just kind of you know, using these moving averages, a 10-day moving average and 20-day moving average, kind of like a wave, you know, kind of like a riding the wave. Pulls back, we just hit the 20 EMA. So if we lose the 10 EMA going into next week, maybe the 20 EMA to watch. If we lose that 20 EMA, then we got to support at 216.58, which is a gap support. Remember I talked about last time that if the gap gets filled, it acts as, you know, just instant support. So just watch 216. We lose that level. Next level support is about 215, which is where the 50 EMA, okay, 50-day moving average is residing. So those are the levels to watch. If we do see a pullback, those are the levels to watch. If not, if this thing continues to grind higher, then keep just, you know, watch that 10-20 minutes as this thing kind of surfing it back up like this. And we could be in this extended overbought sentiment, overbought environment, but the stock can keep grinding higher. So it's really, really difficult for you to just guess at this point it's going to come down or not. I do want to say, looking at a spider though, we do have a bearish divergence here. You can see his price has made a slight higher high, and these oscillators are start pulling back. That kind of gave us a little bit of a, you know, short-term warning signal that the stocks may be pulling back next week. But again, they can keep grinding higher, and then these things keep going lower. So I'm not sure it's going to pull back next week or a week after. I would have to see what are the levels, you know, what I have to see the action when it starts to come down. But again, we are dealing with the bull market, and this market is strong, and we are in this primary term uptrend, resuming back up. We did see a shakedown in 2015, 2016. We did not see a crash. We did not have a bear market looking at a primary term. We saw digestion, we saw, channel type of action here. We said consolidation, sideways movement. Okay, market goes up, comes down. Market goes up, comes down. Market goes up instead of coming down. I mean, we did see come down, but we saw this kind of a channeling action. That's what we call a continuation pattern. And in the primary term, So, and then we're continuing higher, meaning the bull market will likely continue higher. I mean, we see a pullback along the way, but we're gonna see that, you know, higher lows and higher. So I think this is what I'll say. If you see any kind of steep decline on the market, I would look at that as an opportunity to go long, not only just on S&P 500, and look at other, you know, other equities where you can see that there's a good chance where in any pullbacks it will be an opportunity to go long here. So let's see, we looked at Qs, we looked at Spider. Let me look at the Russell 2000, and we'll call it a night. Russell 2000 here, let me get rid of this. You know, we had this, you can see that right there, we had this huge inverted head and shoulder. That's a reversal pattern, right? We came down a lot, but now we're cultivating bullish uptrend here with the higher lows and higher highs. Looking at a more of a minor term perspective, obviously you can see this exactly same thing happening on Russell 2000, just like a spider. We have the 10 EMA, we lost the 10 EMA, come right to 20 EMA, and then it bounced back up. 10 EMA at that support, we gapped up, and then we've been holding the 10 EMA, pull back, trying to almost lost that 10 EMA, but gotten up, and then today you can see we're holding right at that 10 EMA. It's been happening since mid to late July. That's been what? That's about a month or so. It's been perfectly respecting this moving average. When the moving average gets respected this way, this is what kills the bears. You know what the bears want? They want to see some wild swings. They want to see some crazy shenanigan moves so they can possibly profit, right? That's what they want to see. And then when the markets get into this kind of a calm manner, that's what irritates the sellers, right? They can't. This is what kills the bears softly and slowly, right? Because they don't have patience. And you know what? And you think the sellers make money? Do you think, I mean, if they did it perfectly, they went short here and they cover it right here, they made money. But a lot of times what they do is they want to make more. A lot of times these sellers, they are market crash theorists. They think that the whole market is gonna get into a bear market. Remember Mark Faber? He's been calling the bear market since 2011. So these guys think that it's gonna continue like this. So what they do is that let's say they start shorting here, and then let's say they made money, and then it got back up, they lost all their money. You know what they do? They start adding to their short positions, and then as the market grinds higher, it kills them. It kills them. I'll give you this. I'll tell you this. On the Russell 2000, we have reversed. There will be no longer a crash happening, and it never was. Okay? We have cultivated these lows, higher lows and higher highs. We got this uptrend cultivation happening. There will be no longer bear market happening. That's all you had right here. That's it. We're now going to have higher lows and higher highs. We'll see pullbacks within an uptrend. We'll see moves up and down. And what's going to happen is every time we see a pullback, you're going to see bears getting excited. But that will be short-lived because it's just going to go right back up. Market is going to go right back up and make its move to the upside. And when that happens, it will crush the bears. It will crush the sellers. And that's how this market runs. That's how this market runs, right? So when market gets up, gets down like this, and then when it starts to get back up, this will give buyers hope. And then it pulls back, it will crush the buyers. That's the same thing in logic. That's the same thing happens in opposite way, in inversely, or in a opposite way, where the market goes up and it pulls back, and this gives the bears hope, but it'll crush them when it gets up. But they'll say, well, no, I'm right, my analysis is right, so it's gonna come down, the whole market is going to crash. And then when it actually pulls back, they're gonna say, aha, I was right. And then they're going to start adding more to their short selling positions or put positions. And then when it goes right back up, it will crush them. And it happens over and over. And then finally, when they're tired of it and they close everything out, after losing all kind of money, maybe we'll see a huge kind of a dive in the market, kind of one last shakedown before getting back up again. So that's how this market works. And if you understand the psychology of this market, I think, then you'll be, because it's not enough to just understand the technical aspect. It's not enough just to understand fundamental aspect. You have to understand psychological aspect of this market. But I think Russell 2000 looking to me, very, very strong. And look, I'm more looking at the big picture. I mean, yes, we are dealing with the minor term, overbought status, but just Russell 2000 is still in this band of support. We're still in this uptrend. We're still in the primary term uptrend. You want to compare it to 2008. I mean, once we got into the downtrend, that was it. But Russell 2000, we are very, very strong uptrend. Seems like there's a good chance it can even get to 175 and higher. There's an analysis I've done in my blog that I compared 1994 price action to 2016. If you go to my blog here, right here, so if you go twotradersclub.com, you go to right here, and Bulls one last fight for higher in-depth analysis. Again, this was back in early this year, January 30, 2016. Okay, and so again, 1994. You can see we had this run, and then we started just doing this. We had this huge major topping pattern in 1994. So it's not enough to just understand these topping patterns. You understand? It's not enough to just understand topping pattern, because sometimes they give you fake out. And then we even had a lower low, and that looked very bearish. Could even come down to 190 on the Russell 2000, but it really didn't. Okay, today, this is today. Do you see the resemblance? This wasn't today, this was January. Okay, this wasn't everything looks, it's worse. Looked like the whole thing is going to go to about 700 on the Russell 2000. Everything looks worse. That's the hardest thing in the market, because when everything looks so bearish, it's so hard to be bullish. But that's exactly what you need to do. Today is not today. Again, this is early January, okay, 2016. When I wrote this article, that's what I mean today. So 1994-96, what happened? We broke out of this. We had that breakout point right here, and then look at this. It soared. And am I saying that just because it happened in 1994, 1996, it's going to happen today? No. What I'm saying is we have a similar chart pattern, meaning investors are feeling similar way. That's exactly what I'm saying. So let's go back, and I'll end with this right here. I mean, you can look at this level as a breakout point. All right? Right here. Look at that move. Right? And there are other things that I talked about in that. So I will end the video with this, and I think, I think the bull market is resuming, looking at a primary term, and I think there's a good move to the upside. The best way to keep in touch with me, with all my videos and posts and things like that, is go to twotradersclub.com, twotradersclub.com, and follow the blog and put your email address there and follow, and that way, all my videos, all my video like this one, or my articles, I mean, I put them on YouTube, and I'll tweet it out and stuff like that. But if you're following many people, you may miss some of my posts. But if you actually want to get all my posts, all my videos, follow the blog, and that way you get article alerts, new article alerts, and video updates in your email inbox. That way you can always keep in touch, or keep update, or keep you updated with what's happening with my blog, or if there's any kind of new articles and videos. Have a great weekend, and I'll talk to you on the next market update video.